The number one way for S corporation owners to pay lower taxes is to set the right salary. Hi, I'm Kimberly Bagley, CPA, and I help online entrepreneurs scale their business with the simple SORT method. We sort your business by focusing on 4 key areas: SORT, operations, record keeping, and tax slaying your business. Today, I want to talk to you about setting the right salary for your S corporation, because that will, in effect, help you pay lower self-employment tax, which is the ultimate goal of being an S corporation, right? So here's the principle. The lower you set your salary, the more you save in payroll taxes. If you set your salary too low, then that is going to be a huge red flag for the IRS. And since just this past year, the IRS received over $80 billion in funding, their main thing that they're looking at now, or to use that money for, is to increase audits. And one thing that they have actually said they were going to increase audits on were S corporations, and they are looking for the officer's compensation line on that S corporation tax return. So if there is no officer compensation on that Form 1120S, you can not guarantee, but you can pretty well know that that's a red flag, and you're going to receive a letter asking why there's no salary. Now, there's certain situations where it makes sense that there's no salary. For instance, if the S corporation's not making any money, then you have no money to pay out in salary to the officers, even if they are performing services. But if the corporation is making money and showing a profit, and the number one thing here is if the officers are actually, the shareholders are actually withdrawing money for personal use, taking distributions, but not in the form of a W-2 wage, then that is a big red flag. The IRS is more than likely going to categorize that those draws, those distributions from the company bank account to the shareholder, they're going to recharacterize that as wages. Then you're going to owe back payroll taxes, which is your Social Security and Medicare tax. So you do not want that to happen. So the key is to set the salary at a reasonable compensation, is the IRS's term, and it's very subjective. And so you definitely want documentation to back up whatever number you come up with. We offer that as a service. If you want to give us a call, that'd be great, and we'd help you set that number. But today I want to talk to you about a few things that they look at so that you know how to come up with that reasonable salary. So when considering reasonable salary, your first step is to find reliable statistics regarding the wages for your job in your area of the country. So if you live in Texas, where I'm at, it's not going to pay probably as much for the same job in New York City. So you need to look at that. You need to look at the services you are providing to your company. Are you operating as the CEO? Are you also the sales manager? You know, if you had to go hire someone down the street with the right amount of education and the right amount of job skills to do what you do for your business, how much would you have to pay them? The IRS is going to look at that. That would be a reasonable salary. And so they're going to ask, why aren't you paying yourself that? If you perform multiple jobs like that within your business and you aren't sure exactly how to classify your role, then you just need to look for the closest comparison that you can find. And, you know, if it's, you can go to, there are different websites online that you can even look at, even looking at Indeed and some of the job boards, ZipRecruiter, Indeed, you know, you get salary ranges on certain jobs, and you can see the job descriptions. So that will give you a good idea, as well as what other companies are offering the general public for what you do for your business. So you'll want to screenshot these things and save them so that you have some backup. These are just suggestions. These are not hard facts, because of course, if under an audit, the burden of proof is on you, the taxpayer, to show how you came up with that salary. Now, if your business is less profitable, like I mentioned before, than another business in the area, then that's going to be taken into account too. Or if you don't work full-time in your business, maybe you have an operations manager and you're just basically kind of like a passive investor, just funneling your money in there to keep it going, but you're not actually doing, working 40 hours a week. Well, then you would consider paying yourself a part-time wage if that's the case. So basically, those are some things that you want to think about when coming up with a reasonable salary. So it's a nice little dance we have to play between what's a reasonable salary and then how much you can take out of the business as just draws and distributions. Because in order to save on the self-employment tax, which is one of the main reasons of being an S corporation, there's a fine line there. And there's other things that go into play when we take your whole personal tax situation into account, okay? Because other deductions play in to your taxable income number. So that's all within the tax planning veil that we offer at our firm, so that we can plug in the numbers with your unique situation and help you determine what is the best salary to get the maximum tax savings possible for you. And as always, I'm here to help you sort your business to new heights. So book a free call with me or click one of the links below in the description or comment section for other great resources that I offer, and we'll talk soon.